Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, April 23rd. Michael Boutros here with you on the mic. Great to see you guys in the room. Aurelian, Imen's in the house. Bippin, welcome aboard, my friend. Peter, Pete, Pooja, Ziad, Kamal, always a pleasure to see you guys. Good morning. Yes, to you as well. So, we have some stuff to look at. Unfortunately, they're all the same things we've been looking at as these ranges continue to hold. DXY holding that resistance. We'll talk about that. We'll talk about yesterday's setups on Aussie, Sterling, and Kiwi. Kiwi continues to drop. We didn't get the reset, but the levels still look pretty good. So keep an eye on that one. We'll circle back and hit Euro and Euro Kiwi from the previous night. And then the commodities, gold and crude. Gold settling into a pretty major support barrier. I'm not chasing this any lower from here. Crude is and does seem like a legit breakout. But there's a couple of things on the near term that still have me hung up on trying to chase any higher moves in crude. Obviously, we got some news yesterday, guys, that the U.S. has essentially cut off all or basically will stand next to all sanctions against Iranian oil, which put a floor in the market and saw this pop here. At the end of the day, we're coming through big weekly resistance. So keep your eye peeled for that. Any other questions or trade setups you guys want to review? As always, throw them on the message board at any time. Let's jump right in. So here's DXY. Y'all have seen this chart before. There's nothing new here. Went over this yesterday in the webinar on Daily FX as well. 97.42, last week's high week and high day close has been rock solid resistance. Again, this is all we're really focused on. The play has been to try to short strength into that region. At this point, this is like the fourth attempt. You want to be cautious. Momentum has a trigger lined up. If weekly momentum breaches this resistance trigger and price breaches this resistance level, it would shift the focus higher. Now again, 97.87 is just higher, and that's the 618 of the entire 2017 drop. Also converges on the 2011 slope line, right? We talked about how influential this gradient has been on every single major turn in price since then, in 2015 lows. Converges just higher. So look, I mean, we're in a clear-cut range. We're at resistance. You know, tread lightly. Here's what DXY looks like on the daily chart. Okay, the high day close now converges pretty darn close to the opening range highs for the month. Here's the daily chart since the start of the year, right? Here's that resistance level. Again, the opening range highs for the month come in at 97.52, so just a little bit higher. 97.71, the stretch high from last year, and 97.87, again, that's 618, converges on slope, even from the near-term front of just the upslope from this year's low. So, you know, all things held constant, guys, we're at the highs, we're at resistance. Does that mean I want to short necessarily? No. Does that mean we want to buy here? Well, if you're not already holding a long position, you're buying at the highs. So how can we, you know, get on board with that? So that's kind of my thought mentality with where we are here in the dollar. It's you know, all things held constant, it seems like it wants to make it break higher first. Like I said, if you're holding longs, looks good, but I wouldn't be jumping into any fresh long positioning from here. A quick look at the intraday chart, and this is what we presented yesterday. So what I wanted to highlight here was very simply that you have a nice confluence region of resistance right now at 97.42. It's the same level we talked about last week. We actually closed just a pip above. The actual close came in at 97.43, and we gapped lower into the open. So if we're just going to fill the gap, you still have to allot this rally to get back up into 97.43, and that's where you'd want to see a stronger hold if DXY is heading lower. All things held constant, a breach of the median line, a breach above 97.42, you're looking for the upper parallel. This is the 618 line of the pitchfork. Okay, so it's nice a Fibonacci consideration, caught perfect resistance here. On a topside breach, you're looking for that level, comes in around 97.60s, just higher, 97.71, that level we highlighted as last year's swing high converges on slope. So it's all about what happens basically right here into the US Open. If we get through 97.43 and we see some follow through, we're in the upslope. There's nothing to try to fight this just yet. If you see exhaustion here, price starts to pull back. A settle back below 97.38 might have me trying to pull a short against that high, just for a move to slope support at this point. We got to choke up these points, obviously, as we move forward in time. But the immediate focus right now for me is on how this reacts into the U.S. Open right here at 97.42. Questions, comments, concerns on DXY? Momentum is pretty constructive here, right? We didn't even see a 50 break, well above 60. Still constructive. We want to see what kind of reaction we get at Friday's close here. Okay, that is DXY from last night. Number 2 from last night. I did want to cover Aussie. Oh, it looks like we're getting a pop through right here. Let's see what this looks like on the 60-minute, shall we? Looks pretty good. Looks pretty good. Don't try to fight this. So last night's Aussie setup looked like this. Here's what Aussie looks like on the bigger picture. Remember that, or recall that last week we came into a huge resistance level. We've talked about this for a while as well on Aussie. The level's 71.84 on the upside. We need a weekly close through that to validate the breakout. Okay, you have trendline resistance dating back to those highs they made back in June, and the 618 of the yearly range, essentially, from the highs that we made back in February, I should say. Catching the highs right there. Critical support, still 70.42 into 70.20, a 20 pip range that caught the lows. Again, on a closed basis, guys, this is pretty clear. Momentum, clear support trigger there also in play. Weekly chart, right, from 1,000 feet up. Here's daily. Dollar's ripping. So Aussie should be tanking. Can I get the combo, please? Ty, on which one? DXY? Here's the side-by-side in the DXY. Daily and intraday. He says, yes, got it. All right. Here, just get that 618 in there. Go ahead. A quick reminder, anyone who's new to the room, I see a couple new names here today. As always, you can always click a camera button. There's a camera on the top of your GoToWebinar screen. So if you ever need to take a snapshot of anything that we're going over in the room, you can have it for future reference. Obviously, all these charts are provided for you on the intraday page. Okay, so Aussie. So I just wanted to remind you where we were coming from last week. We posted a reversal candle off that big resistance. The main focus for Aussie still this critical range. Okay, here's Aussie dollar in the daily chart. So from the daily perspective, this is initial area of support we're looking for heading into 71.11. We're basically testing it right now. We're trading at 71.07. This is the 618 of the ascent from the monthly lows. Also, you have some slope in there and the lower median line parallel for the pitchfork we've been following off of the February-March lows. Median line resistance, median line resistance, median line resistance, lower parallel support. This is your first area of support to look for on Aussie. On the daily chart, right? On the daily chart, we're on the back of a 5-day decline here. This would be the fourth consecutive day of declines for Aussie. Here's what it looks like on the intraday. So the intraday has a little bit more room to go before we start to come into anything major. And here's what the chart looked like last night. And then obviously, guys, if the daily and weekly charts aren't provided for you, it's always one click away. So if you see a previous update, click on the previous update. It'll take you right to that report, where in that report, as well as the daily and intraday charts. But it's the same pitchfork we've been working from last week. And as I said in yesterday's update, I don't know how I feel about this pitchfork, but the levels are clear, and we always want to be mindful of the levels that we're trading on. Weekly open resistance 71.50, bearish inval 71.67, downside targets still 71.21, and we're now testing 71.11. Here's that 618. All right, so if you're holding shorts, a good spot to take a little off the table, bring your stops down to 71.21 or lower. You're looking for two major levels, okay? The first one's going to be just that basic slope support off the low that you made back in March. in April of this month, so early this month, that comes in like 70, let's just say 71. It's 70.95. Yesterday it was like 70.90. Um, and then just lower, you have the 786 retracement, and that converges on downslope support near 70.85. Now, a couple things to take note. Obviously, like I said, this pitchfork, I don't know how much credence I want to give this slope. I was looking at the 38.2, which offered some decent, looks like a decent gradient. This should fuel acceleration here, if that is the case. But point being, focus on the lateral levels more importantly. So all things held constant, immediately heading into the U.S. trade session, it's lower sub 71.21. You're looking for that near-term support targets at 71, just below, and 785 is going to be a bigger region of support. You also have that swing low from earlier in the month there at 70.88. Pretty decent moves in Aussie. Remember, this thing is still in oversold territory. The fuel is on the way, is in, or on the side of, I should say, the bears. So we'll have to look for some sort of change in momentum before you even try to attempt to play a recovery there. All things held constant. Let's see if we can get that drop into 71. Any questions on Aussie? No changes for any of the levels from last night. Okay, number 3 is sterling. And I thought it prudent to keep an eye on this because it's coming into such a critical range that if broken, really should fuel some acceleration, I should say, to the downside, but we're not getting it. Bring your attention to this first. Here's the weekly chart we've been following on sterling. It's been a real just messed up couple of weeks. This pitchfork, which was so instrumental early in the year, was really nice. You saw that 618 line, okay, of the pitchfork, offering really nice support. We rebounded again, support, posted an outside reversal week into resistance, and that's where this thing completely halted, right? Your typical exhaustion trade, an outside day reversal or outside week reversal into resistance. Ever since that move on the week of March 11th, we've been sitting in a contraction range or a consolidation range, whatever you want to call it. It looked last week like we broke the downside of that range. But like I said, we're not getting any follow through. So some things to take note of real quick on this, just the weekly chart. Look for that slope support. If we do break lower on a continued move, that's like 28.67. Bullish inbound, we're going to keep steady at 27.54. Nothing's changed on that. That's the weekly, that is the yearly open support. And that would necessitate both a break of the swing lows from earlier in the year here back in February and slope support. So this is the only thing that would put me back on a bearish trajectory in sterling, straight up targeting 24.70 and beyond. All things held constant, the immediate threat is lower, but I'm looking for exhaustion well above this parallel. Okay, here's what the daily chart looks like in sterling. So again, if this is a legit break, we should have seen acceleration here, right? This break should have fueled acceleration. Now, just lower, you have a really nice confluence region of both the 100-day and 200-day moving averages. Okay, give your range right around 29.60 on that. Just lower, 29.03 is going to be the 786 of the advance and that longer dated slope support. So for me, I guess the way to play this, or what I'm looking for, is either going to be a spike low into this region and failure, but we want to see a breach above basic downslope resistance for us to start favoring the long side. I'm of the mindset, guys, that this is going to fake out still. Why? Momentum profile still hasn't broken 40 since the start of the year, essentially since the lows that we put in price. That was the low point in momentum. Ever since then, we've held 40 support. A nice resistance trigger is in play right here. If you take a high in price, there's your resistance trigger, a nice 3-point touch. And it's poised. It's just not there. It's not ready to go. So near-term resistance, you have, that slope converges on basically monthly open right here, 30, 37, or thereabouts on the daily chart. That's where we need to see to validate sort of a reversal play to the upside. All things held constant, if we fail here at 30.30 again, you'd expect to see the downside break towards 29. The end of the day, guys, this is a multi-week consolidation that is tempting a downside break. If this is a fake out, we'll find out today, and it's going to be with a recovery and close back above 130. Period. Here's sterling on the intraday chart. I'm going to bring it to the 240 here. Let's give you a better zoom out. And again, here's what it looked like last night. So for me, I was kind of looking for a drop again into that 200, 100-day confluence region, just lower, right around 29.60 would be a beautiful spot. We didn't get it. So here's your kind of like false break scenario, pop back above 130, and we're straddling it right now. Ideally, this sets up a weekly opening range over the next, I don't know, day and a half, today and tomorrow, and the topside break would give us the reversal higher. If it fails, though, the levels are pretty clear. You're looking for 29 on the drop. So again, indecision, you're consolidating right into the apex of a wedge formation. This thing is going to give out. We have to be patient. We have to be patient. Questions on sterling, number 3. There's a side-by-side for a tie. All right, the other one, which is actually playing out pretty good if you're in it. If you didn't get in it, I don't blame you. Jamie did put out a swing yesterday. Kiwi, man, this thing, what a beautiful drop. So here's Kiwi on the weekly charts, and here's what Kiwi looked like last night. You know, we've been following this one pretty close. Basically, the weekly chart had us in a very, very clean range below a critical resistance confluence at 69.30. We talked about that, 200-week moving average, 50% retracement of the 2018 decline. Yearly opening range highs, really clean hold. There was last week's break and close below 67. Keeps the focus on a move down towards 66.33, and I think we're pretty darn close to it, trading at 66.53 now. That's the 618 retracement of the advance off last year's low. And again, you know, this break of upslope support, one touch, two touch, there's the break. We test it as resistance, and we're moving off pretty clean moves. Okay, Kiwi dollar on the daily chart looks like this. There's the consolidation that we were in since the start of the year. Resistance, resistance, clean break, resistance, resistance. We've been following this downside channel ever since. Now, a couple of things that I want to note here on the daily chart. Obviously, we have this near-term slope that we've been following just off the monthly highs. An extension off the opening range low for the month has us coming into support basically now, but the more important lateral level is still 66.33. That's the 618 retracement. So, you know, momentum, still have a little bit more room before you drive into 30. That's the next downside target for those of you holding shorts. Resistance 67.05, bearish invalidation 67.22. You have the 200-day just higher at 67.30. That's going to be our bearish inval. It's also the objective monthly opening range lows. So remember your opening range strategy. Here's your monthly open. You set a low. You can't even make it towards the high. You test the low again. You finally break the low. This singular day here on the 17th, we talked about this yesterday. The close above 67.20 had us looking higher. That quickly got refuted. Closed lower, and here we are still continuing to hold this channel. Intraday chart looks like this. All right, so here's the pitchfork we've been following off the highs on the intraday chart. Pretty darn clean. Last night we noted 67.05 again, resistance, bearish inval, if this was going to hold. Jamie had our entry for a swing setup somewhere in this range as well. Unfortunately, didn't get the swing higher. Here's the move lower. So right now on an intraday basis, that 66.33 level, guys, now converges on the 25% line. So really sweet, okay? Even the immediate slope of the downturn looks to converge on that same level we've been looking at from the weekly chart, right? There's a couple things there. I don't want to confuse everyone, but the outside reversal close that we made back here in August of last year also closed at that region. These are things I tend to look at that add further technical significance to a lateral level in price. Brings more attention to 66.30. Look for a reaction there. If you're holding shorts, like I said, that's where you want to wrap up most of the position. Okay, if you want to leave a little on, that's your perspective, but bring your stops to better than break even. If we break above weekly open resistance at this point, you look for a larger rally. So weekly open comes in at 66.90. Put that as near-term resistance, bearish inval at the yearly open. Questions, comments, concerns on Kiwi? Again, you kind of take a look at this and you want to just be as objective as possible, guys. We had a multi-month consolidation. There's the downside break. Tested that lower parallel as resistance. Here's a continuation lower. First major area of support, 66.30, 66.33. Marco says, same conclusion for Kiwi Yen. Kiwi JPY. You know what? I haven't looked at Kiwi Yen in a while, Marco. Let's go ahead and take a look. I'd be interested to see what that's doing actually too. Because I'm with Jamie, I'm actually of the mindset that dollar yen does move lower. That's yen strength. Let me see what the Kiwi Yen weekly chart's doing. Bear with me one moment, guys. So look, I love where Kiwi Yen turned. Okay. Aside from the 38.2, let me redo this real quick. Bear with me. Interesting. So the original slope, and what we call the original slope is just the gradient that we've been following from the origin of the turn. Really clean, support, whatever the hell that is into the open of the year. On the upslope, you had a false break scenario here, but on close, you actually only got one daily close above, and it quickly got recapped. Here's what the line chart looks like. So once you pull back, there's resistance and resistance again. Keeps the focus on that gradient, in my opinion. Here's your yearly open. Interesting. On this, just objectively, you look at the momentum signature failing here at 60 on the upside on the swing that we made for the false break of that channel resistance. Again, here's the break below 50. Momentum still looks like it's on the side of the bears here on the weekly chart. Daily chart looks like this. Here is your monthly open. Looks like a clean break of the monthly opening range. Yeah, this looks pretty bearish, in my humble opinion, Marco, near term. Hmm. And we just added this on the other chart. So look, I'm looking for confluence regions, 73.96 into 74.10. This So I have a soft target right here. I wouldn't go nuts with it. It's 74.45. Watch for a reaction here now. But the break of the weekly or the monthly, excuse me, opening range, Marco has me looking here. It's a nice confluence region right there. It's a 100% extension, two equal legs off the high, and the 38.2 off the low for the year gives you 74 essentially as your downside target here. Resistance on this trade would have to be right slap at the middle. That's your monthly open. So the monthly open support, resistance rather, monthly open resistance comes in at 75.74. Slope resistance goes in the same spot. That would be your bearish inval. Looks pretty good. Marco says I'm short from 74.64. Not bad. Not bad. So you have the 200-day moving average right there. Let me look at this near term. Give me one sec. Sorry, guys. Thanks for bearing with me. I'm always down for some on-the-fly analysis. Oops. Yeah, it's not bad. I just want to see what this looks like. Might be a play. Might be a play. So on the near term, we can actually just work with this pitchfork here, extend it off the highs of the month, or excuse me, extend it off the highs from last month and this month. Here's your March open. And again, same levels come up as areas of confluence support, 38.2, just below, comes in at that 50 line. That converges just below 74. All right, hope that helps, Marco. He says, clear, thank you, more than welcome. When Jamie called the short on dollar yen, I took the Kiwi yen short. Marco, I love that thought mentality. And guys, be dynamic with your trading. Absolutely. If you see a clear and obvious bias that myself or Jamie has, and you see an opportunity in another cross that looks like it has a better entry or the better opportunity, jump in. I like how your thought process worked there, Marco. Yeah, it's the yen, so automatically you're going to hear me take a cautionary tone to be careful. But well played, sir. Well played. Yeah, I'm not too fond of the yen crosses in general. Number 5, that is Kiwi yen. All right. Circling back to, we're actually going to hit another Kiwi cross. That's Euro yen, but let me hit Euro first. Here's number 6. Here's Euro dollar. And here's what we're looking at. Downside break, obviously DXY sailed through, huh? Yeah, sailed through. So the accelerated move, what we want to see if it's going to be a legit break. You're looking for a move on 97.71, guys. But on Euro, here's the downside break of what we were looking at yesterday in the webinar. Remember, for those of you who were here, let me take you back to the 120-minute chart. We were talking about this in the webinar. I highlighted 1257. That was the 100% extension. It got a little bit higher. Okay, it capped out at 1262. Give me a couple pip allowance here, just ahead of the 38.2 retracement. But we were looking at this near-term bear flags we were talking about yesterday in the webinar. We said if this is going to be a legit hold of the downtrend, we kind of want to see resistance here. Obviously, the market's going to do what it wants to do, set up the weekly opening range just below that 38.2. Here's the downside break. Guys, there's really nothing at this point to hold this up from going right back into that key support region at the 618 at 1186. Here's Euro on the daily chart. Y'all remember this chart. Okay, at this point, 1186 is now also the objective monthly opening range lows. Just above, a couple of pips above, is the actual closed lows for the year, closed lows for March. That's your next sort of support level on the Euro drop. Major longer-term slope support on the weekly chart gets you down into the 1130s, 1140s down here. Keep your eye on that. But first things first, it's all about 1186 for Euro. Here's the intraday chart again. So we were working with this upslope for a while, kind of hoping it was going to hold. Last week's break was pretty definitive. Again, corrective move, two equal legs. Here's a failure. Look for a new low in price. At this point, you can kind of scratch that 100. Don't need that no more. And I also just want to see what this looks like. Bear with 1 second. Oops. Okay, keep that as a soft target, yeah? 618 extension of the drop gets you 12, 112. Again, that longer term weekly 618 retracement of the entire advance, 1186. And then the 100, so 2 equal legs off the high, gets you down to 1164. So on a spike, you know what I mean? That converges on slope too. Actually, let me adjust this. I just want to see what this looks like. Yeah, let's work with that. Levels of interest for exhaustion, possible recovery. More so this, obviously, okay? But both levels to look for as targets on the way down here. Weekly open resistance, now going to be the first area to look for on a recovery. That's right up here, 1245. Ty, coming right up, sir. Here's the combo. Questions, comments, concerns on Euro. Now, guys, I do have to note that sentiment is getting kind of skewed. There's a lot of people getting more bullish the dollar and bearish euro. So again, just want to give you a cautionary note for anyone who's looking for new positioning. Don't chase this into the open here. Okay. So we went over euro, right? With the breakdown, Kiwi broke down as well. So where does that put us on euro Kiwi? That's one we've been following for quite some time, and I highlighted it into the open of the week. Here's what euro Kiwi looked like. There we go. So look, here's the intraday chart. Recall that Euro Kiwi had a major breakout. We've been favoring the long side. Last week, when we spiked into the 2018 Open and pulled back, I thought that was going to be a little bit more of an exhaustion let off for a pullback so we can get back on the long side. We never got the pullback, and here we are at the highs again. So again, it's like the same levels that are in focus. Here's the intraday chart. I just want to show you a slope adjustment. Excuse me. We've been working with this pattern here, which has been decent on the pivot. But if we take a little bit of a less conservative approach, okay, with the parallels here, gets you a little bit cleaner. And it highlights, again, 2018 open resistance where we tagged that high last week. 69, still a big region. Just higher, you start to run into that channel now. The only thing that kind of stands out as concrete support still is going to be 67.46 and 67.40. Okay, the same level that we were talking about is like this is the break point. We need to break this to go up. We need to break this to clear the upside. That's the level that we need to hold for the upside to maintain its approach here. Again, divergence in overbought condition, never really a strong signal, but it's there. So the possibility for a near-term washout here is there. If you had to put a pistol to my head and ask me what are you more bearish, euro or kiwi, I'd have to say I'm more bearish kiwi. So you know what I mean? I wouldn't be surprised if the downside move here is short-lived, okay? Because I think that the broader push on this one is still going to be to the upside. I mean, the daily chart, has us breaking out of a big region. We haven't even recouped the whole yearly range yet. Yearly open resistance still all the way up at 70.68. Got a long ways to go. So, um, just something to keep a note there for any of you who are trading Euro Key. Here's the weekly chart, right? No surprise, we're getting some kickback here. Ultimately, we want to buy that. I just think you're at risk below 69 for a little bit more of a washout before you turn higher again. And here's the 2018. Actually, it's not on the daily chart. Let me put it there for the sake of clarity. Show you exactly where we are. All right, so that is Euro Key. We will revisit this one. Kind of sitting on the sidelines right now. That initial candle earlier today on that 2-hour chart looked pretty convincing, but the 4-hour doesn't. It would have been more convincing to me if the 4-hour turned out to be an outside reversal candle off the highs. I would have actually looked to fade that right off the bat, but didn't quite give us that signal. So we'll see. I'm more of the mindset that just a short recovery gets us the resumption to the move higher, but near term, that's the risk I think for a washout first. Questions on Euro Kiwi? All right, let's jump into some of these commodities here. Like I said, I mean, let's just hit crude first, I guess, because that's what everyone's talking about. But the cutoff of Iranian oil, we talked, or I just prompted you guys about that yesterday, gave us the run up. Look, 66 is a level that we were just looking at. It's the close low for this outside, or wasn't outside, but this reversal candle that we made back on the daily chart here in October of last year. Just a decent pivot in price. If you look to the left on my cursor there, you can see some nice pivots. Now, what do you do with this? Here's your monthly open, guys. Ever since the monthly open, we've just been ripping higher. You didn't get a concrete monthly opening range. You could consider this opening range high for the week, for the month. We set this on the 9th, and we've been holding it ever since, which would give us an upside bias with yesterday's move. Can I buy it fresh, almost yearly highs? Nothing to do here, guys. You're getting divergence on the daily chart. That could still, materialize for a couple more days before it turns over. I'm cautious. I'm cautious about trying to chase this or getting too excited about this. I'm sorry about that noise, guys. Construction in the offices here in New York. But here's the level. I mean, look, a breach above 66, and you're looking for 68.72. That's a big jump. That's not a scalp. That's not an intraday type of trade, but that's just a longer term move at the 764 retracement from the decline. So again, pistol to my head, I'd say fade weakness well below this high that we just made, or even a spike higher. I'd be looking to fade. Ultimately, near-term support at the slope, 66, 64.40s. Even if it drops down here, it's still going to be bullish, but at least would give us a better opportunity to try to fight this for a move higher. At this point, I do not want to, stay engaged in a long position for crude. It's a breakout. No one's going to argue that. Here's crude on the weekly charts. It broke out early this year. This was our first target. This was our second target. Our third target's way up here. But at this stretch, guys, we haven't had a single down week since the breakout. And I'm not going to sit here and buy at, multi-month highs. So I feel like a broken record because for the last 3 weeks I've been telling you guys the same thing. It's it's exhausted here, or you're at risk for exhaustion here. Yeah, maybe some headline news, event-driven data got us through resistance, but man, we need to either see some follow-through, or if this thing collapses, you look for a little bit of recovery to get back long. Not an area here I'd be looking to jump into fresh long exposure. Okay, so that's kind of my take here on crude. I don't think anyone's going to argue it's bullish. It's just how stretched are we that you can still participate in the bull trade at this point. Eman says, still you are in construction. God be with you, Michael. Yeah, amen. It's not actually, it's here in the Daily FX offices in New York. Typically I do these webinars from my SB office, but it's not. Yeah, they've been doing construction here downtown for like a year. So Part of living in the city, I guess. Yeah, it's been more than 10 days, man. Retrofitting for the new Green Deal, says Ty. LOL. Oh man, don't get me started. Did you hear Cuomo last, or who was it? Yesterday. They want to redo all the skyscrapers in New York. That's the new thing. No more glass and steel. So I guess once we get rid of our airplanes, we'll be moving to that phase of the Green Deal, right? All right, I'll let that go right there. So gold. From where we are in gold, here's what the picture looks like. Look, our suspicions were correct, and if you guys, in any event, here's gold on the weekly chart. Well. What do we do here? Remember, on the initial decline, once we made this rebound here, we had a consolidation in play with that last rebound we made in early April. Now, once we cleared and we put in essentially what turned out to be a weekly doji on the week of the 8th, we said, look, gold needs to register a new low. It needs to register a new low just for the sake of completing a correction off of the breakout that we made from the multi-year downtrend. And first place we were looking for was 1275, 1276. What was the second place we were looking for, guys? I know you all know it here in the room. 1253, 1258. I still think we could get down there. Okay? Anything here, in my humble opinion, is risk. Okay? And by risk, I mean like an exhaustion risk where it could strike a low. Anywhere here. This is our broader bullish inval. If we get below this range, it's going to invalidate the breakout that we made earlier in the year. This is already a break of the objective yearly opening range lows and slope support off last year's low, a 3-point touch, converges on the same region. So for me, this is the line in the sand for the broader uptrend that we've been fighting on for the gold trade. Weekly chart, right? From 1,000 feet up. Keep in mind, what's 1253, 1258? Well, right now it's even more of a confluence region because you have the 52-week moving average right in there. The 100% extension, so 2 equal legs off the high. Boom, boom, boom. And a 50% retracement of the entire advance off last year's low. All converge right here. All right. Here's gold on the daily chart. Basic slope support off last year's low is now being tested. So again, this is why I can't get excited about pressing a short, but I'm not going to fight it either. This is the first test of this support line. You can see that even the last time we tried to attempt this break in November of last year, we probed just below for the last couple of days before we rebounded higher. Look here. If we break 1253, 1258, that better hold. Now, what would put me back on the constructive side, Mike? What would make me bullish, or what would make me think this thing is turned? Two things. Or what would prompt a long position? A, recovery and close back above 1275 would have me thinking that this was a nice exhaustion low, and if we recover back above this region, look to play a rally towards the monthly open. Or if price collapses and spikes into this region and we close specifically above 1258, that would be pretty darn that would be an opportunity for me to fade the low for a rebound as well. Okay, trying to play the short from here, man. And again, we have to be objective. You're shorting at multi-month lows. Can't do it. So gold, man, it's going to be a pivot here. It's going to be a pivot. If we break this trend line, look for 1253, 1258. I know it's a $5 region, a little bit bigger than I like to give you, but such a major critical zone in price. Okay, and you have longer term moving average there. You have longer term fibs level there. You have slope support, right, for the downslope that we've been in from the yearly highs. So parallel there, one touch, two touch, converges there as well. Intraday chart looks like this. So here's my problem. Even on the intraday level, we're at downslope support. So on the pitchfork, we've been following from the monthly highs, or excuse me, the March highs. Boom, boom, boom. Lower parallel support. We turned just ahead of it last week. Here we are testing it now. If we see the downside break, there's 1253, 1258. Near term. I put interim resistance right here at this point. The January opening range low, the yearly opening range low. 1275, 1276. A breach above yearly open resistance would put me back bullish. Nicely, that's also the objective weekly opening range high. So even if that were to break in and outside any of the other levels, you'd be objectively looking higher into the close of the week. So the levels are pretty good. Immediate risk is still lower. You're at support. You're looking for an exhaustion trade with a recovery back above 1275, or if we break lower, 1253, 1258, look for a spike or an exhaustion into this zone on the downside. If you're holding shorts, guys, you should just be peeling a little bit off through these levels, bringing your stops down to break even or better. But it's been a pretty nice, decent trade to the downside. I wouldn't bail on it just yet. Okay, so those are kind of the gold levels I'll be looking for this week. Any questions on anything we've covered so far today, or any other setups you guys want to review? Feel free to throw them on the message board at any time. Pete says SPX. Oh yeah, Pete, where am I? So the SPX, I looked at this last night. The near-term levels are getting kind of messy again. So here's what I'll say. Where is SPX? Here's what I'll say on SPX. That pitchfork that we drew last week, it's being tested as resistance right now. So if this gives out, I haven't changed anything since last week. Remember, we highlighted this is key support, this is key resistance. Well, late in the week, we dropped right into key support, rebounded, and here we are about test key resistance. So this resistance level is the 4-hour, 2-hour reversal close that we made, 29.15. The 236 of the ascent off the March lows, that March swing low, gives you 28.88. What do we do from here? You know what? Drop that. This is resistance right here. Top side break. You're looking for that 100% extension. 2 equal legs takes you right into 29.21. Okay. Yeah, I mean, if there's something called resistance, this would be it. If we see a top side break. Remember, the thing with this is, again, there's so much at play here. We didn't quite turn from resistance. Remember, Pete, we were looking for 29.29. Doesn't converge on slope now, but I still like it. You know, I start to get concerned, guys, when you hear a lot of people all saying the same thing. Like, for example, crude. I'm going to segue. I'll come back to this in a second. But crude, for example, um, or gold rather, not crude. Everyone's, oh, this could be a head and shoulders formation. We just broke the neckline. A measured move takes you to 1220. All right, cool. Yeah, that's all good and dandy. But when everyone's recognizing it, everyone's singing to the same tune, that's when I start to get a little concerned. Maybe it's just me being stubborn. Yeah, so I don't want to necessarily, dissuade you guys, but just over my experience, that's what I've seen, and everyone's starting to jump on board at the same level. So it is with the SPX. Is there a recording of this available immediately? Yeah, Bippin, I'll have this posted. It takes me about 45 minutes, but you'll see it tweeted on SB Squawk, and it'll also be available right on the live sessions page. Can we communicate with SB Trade Desk during the day, like comment, forum, or Twitter, or any medium? So Bippin, the best way would probably be to reach out on Twitter. We try to stay as active with you guys as possible, but Bippin, this is kind of your most immediate forum, right? So we do webinars Tuesdays, Wednesdays, and Thursdays. I'm up on Tuesday and Thursday. Jamie's up on Wednesday. You get a whole hour with us. So this would probably be your best place to kind of communicate with us if you have a trade idea you're looking at or something you want us to consider. Other than that, outside of that, I'd probably say SB Squawk is probably going to be your best bet. Yeah. Welcome aboard. Great to see you. So Pete, this is what I would say, man. You know, it's in a near-term consolidation. The weekly opening range is holding, a pistol to my head. I would say you're at resistance right now in the near-term front. But if we do break 29.11, there's a nice target here, just above the highs for two equal legs off the low. And if you draw some slope onto that, basically gives you a target into today's session to tomorrow's session. High day close 29.29. Confluence region. overnight Asia lows, near-term support. All right. So those levels I'll be looking at near term, Pete, for SPX. So Bipin, what is your success ratio so far on SB Trade Desk? Bipin, you can find all that information right on SB. We have it posted for you. So just go under the very bottom here. You'll see trades. Okay. And then on that page, view SB trade history. And that's going to give you a breakdown of all the trades we've been doing so far since inception and this year. So I'm going to put that link in there right for you, Bipin. Feel free to go through that at your leisure. Pete K says thanks, and Peter Green says thank you, Mike. Great. I love how both Pete's are always paying attention to the SPX. That's awesome. Yeah, guys, best of luck. I mean, we're in consolidation. It's in an uptrend. We broke downtrend resistance or downtrend support last week, so I thought this downtrend would have a little bit more play if we broke 28.88, but it didn't. Basic 236 takes us back into resistance right here. Look for reaction. Should see a fuel play. Okay, if we breach, it should be accelerated. I don't want to see this thing breach and do something like that. If it does, I'd still be looking to short that. All right, Pete. If it breaks here, like I said, I want to see an accelerated move to the upside. Okay. All right, guys. If no other questions, we'll go ahead and drop here. Bipin says, nice. I am very glad to join. Thank you, Michael. We'll catch you on Thursday. Eman, same to you. Bipin, again, welcome aboard. Always great to see a new face. And always a pleasure to have you on board. Best of luck trading, guys. Event risk is pretty light this week, so just keep your eye on price action, specifically with this dollar move. And one other thing to pay attention to is, the broader play that you're getting on the yen crosses, the DXY, and gold, because I think that there's something going to be happening here, very interesting, where you could see dollar strength start to materialize alongside gold and the yen, and that would kind of put you in a stance of possible risk off scenario for the markets. Again, this is all just talk, guys. At this point, we haven't seen it materialize in price, but from a sentiment standpoint, I feel like that's where the market may be leaning at this point. We relook at things on Thursday. Again, best of luck in trading, and I will see you there. Cheers.